Welcome to BISP Solution, and in this today's webinar we will go through the Oracle supply chain and manufacturing, that is SCM. So get started with SCM. In today's agenda, overview of Oracle Fusion application. We will discuss on the overview of Oracle Fusion application. Then we will discuss about the overview of Oracle Fusion supply chain management, and then we will discuss over the overview of P2P cycle and so as O2C cycle. Okay, so that is the today's agenda of day 1. So moving to the next slide. So in this particular slide you can see the Oracle Fusion application is a comprehensive suite of a cloud-based or say a SaaS-based application designed to revolutionize various business process. So in the product family with the Oracle Fusion application, as you can see, the Oracle Fusion Financial, this powerful component handles the financial operations including asset management, ledger management, cash flow cycles, invoicing, payments, account receivables, collections, and sub-ledger accounting setups. And in the Oracle Fusion Human Capital Management, it focuses on human resources. This module provides extensive features for workforce management, talent acquisition, and employee self-service, contributes to the optimize the HR environment. So Oracle Fusion supply chain manufacturing, which covers wide array of supply chain processes. This module takes care of procurement, inventory management, order processing, and logistic, ensuring the streamlines the operations. In Oracle Fusion product management, or you can say Oracle Fusion project portfolio management or so product management, it enables the detailed configurations related to item catalog, Fusion life cycle or so product life cycle. The module is effective for product management and development. So Oracle Fusion project or say Oracle Fusion project portfolio management as a project management solution. This module facilitates efficient project planning, execution, and financial management contribution to the project success and profitability. Now moving to the Oracle Fusion procurement. This module streamlines the procurement process, offering capabilities for efficient supplier management and sourcing, enhancing the procurement and life cycle. Oracle Fusion CRM, that is customer relationship management. This module enables the business effectively manage the customer contracts and resources while also providing the robust data quality and configurations. Last not least, the Oracle Governance Risk Compliance, which is also known with GRC. So business can utilize this module to establish critical business controls for efficient risk management, multi regulatory compliance and enforcement of control, or you can say provide additional focus on control for risk management and compliance. This module ensures robust governance and regulatory compliances, you can say. So move on to the next slide. In Oracle Fusion, supply chain management is a powerful platform designed to streamline and optimize various supply chain management processes. One of the key components of Oracle Fusion Supply Chain and Manufacturing Cloud offers a robust and efficient way to manage manufacturing operations in the cloud. So some of the key features and functions it offers: the procurement and purchasing. This feature allows user to manage the procurement process, including supplier negotiation and purchase order. It also supports self-service procurement for requisition and approval. Inventory management. With this feature, user can effectively track inventory levels, monitor stock movements, and optimize stock replenishment. It also includes support for cycle counting and physical inventory processes. The order management. This feature enables user to handle the sales order, configure to order, and drop shipment. It also provides tool to monitor order fulfillment and track order status. Product lifecycle management (PLM). User can collaborate on the product design, developments, and changes using this feature. It is also allowed for the management to bill for of material, that is BOMs, and engineering changes order, so that is ECOs. And the manufacturing execution. This feature helps the streamlining the process, manages the work order, and track shop floor activities. It supports both discrete and process manufacturing. So logistic and transportation management. User can optimize the transportation routes and manages the carriers and track shipment. Using this feature, it is also include support for handling freight cost and transportation planning. Demand planning and forecasting. This feature uses the predictive analytics to forecast the demand and plan inventory. It is also facilitates collaboration with sales and operational teams. Supplier portal and collaboration. This enables the enhancement of communication and collaboration with suppliers by enabling the shared forecast and schedules and quality information. Setting up of manufacturing plant data. Manufacturing engineers can use the web-based tool to define the manufacturing plant data, including the specifying the organization where the manufacturing setup data is managed, creating a production calendar and associating the parameters and profile options. The, the application also allows the definition to work area, production resources, and resource rates. Core manufacturing capabilities. The Oracle Manufacturing Cloud support both discrete and process manufacturing scenarios and covers the standard product configured product and contract manufacturing and batch production of a product and byproduct. It also supports the project specific manufacturing execution. The comprehensive supply chain solution. Oracle manufacturing components. Other Oracle cloud application provide complete supply chain solution for both discrete and process manufacturing companies. In summary, you can say the Oracle Fusion supply chain platforms streamlines and optimize the various supply chain processes with features such as procurement, purchasing, inventory management, order management, product lifecycle management, manufacturing execution, logistics and transportation management, demand and planning and forecasting, supplier portal and collaboration, and setting up of manufacturing plant data, core manufacturing capabilities, and comprehensive supply chain solutions. Moving to the next slide. So what is a P2P process? A P2P typically consists of, to initiate the procurement process, the employee first creates a purchase requisition, that is PR, to formally requisition the purchase of an item for organization or an internal request for internal organizational needs. Once the requisition are created, the user proceed to generate a request for quotation, which is also known as RFQs. The RFQs serve as an invitation for potential supplier to bid on providing the required goods and services, including the buyer specified price. Suppliers then respond with quotation, the details, the total cost of the products or services. These quotes may be response to the RFQ or independent of it. After reviewing such selected quotations and create a purchase order, which is known as PO, which in which we decide the terms and condition and deliver specification also. Upon receipt of a ordered goods or services, user records the receipt to ensure the accurate inventory management, and subsequently an invoice is created based on received goods or services, detailing the amount owed to the supplier. This step also involves generating the accounting entries to track the financial aspect of purchase. Finally, the payment is made to the supplier either in the full or partial to settle the purchase. So let's move to the next slide. The procure to pay, that is P2P life cycle, is essential process in area of accounts payable and procurement. It involves several steps from recognizing the need for goods or services to final payment of the invoice. Here are some of the details to overview with the P2P cycle. So I can say with the example I will let you understand the scenario. So identifying the need, for say example, as a department recognize the need of a new laptop to enhance the productivity. It initiates a purchase requisition. The department submits a purchase requisition outlining the laptop specification, quantity needs, and any other relevant information. The purchase requisition approval. The requisition undergoes the approval process and became the basis for the purchase order once approved. Creating a purchase order. The approval requisition is covered into a purchase order, including the product specification, quantities, price, and delivery terms. Then sending the PO to vendor. The PO is sent to the chosen vendor for the laptop. The goods and service receipt. Upon the receipt of the laptop, the receiving department checks the goods to ensure they match with the PO specification. So in the goods invoice matching, the account payables team match the received goods with the PO and the vendor invoice to ensure the accuracy. The invoice approval. After matching, the invoice goes through the approval process to verify that the goods or services were received as expected. The payment authorization. Once the invoice is approved, the account payable team authorizes the payment possible, involving the setting up of payment in the financial system. The payment processing. The payment is processed using chosen payment method, or you can say through wire transfer, check, electronic fund transfer. Various methods can be used to make the payment of the outstanding amount, right? So the liability account, you are able to pay through various modes of payment. Then you record the transaction. The payment is recorded in accounting system, update relevant accounts, and maintain the accurate financial records. Then we do a vendor reconciliation. So regularly the reconciling with the vendor statement with the accounts payable records to ensure that all transactions are accurately reflected. So archiving your documentation. All related documentation include the purchase order, invoice, and payment records is archived for audit and references purposes. Report and analysis. Periodic reporting on P2P metrics such as cycle time, cost saving, vendor performance aids is analyzed and efficiency of the process is known. The P2P cycle ensures the streamlining the control process for identifying the need to make the final payment, promoting the efficiency, transparency, and financial accountability within the organization. So moving to the next slide, where we discuss about the advantage of P2P cycle. The procure to pay or say P2P cycle is a critical component of a effective business operation. It encompassing the series of interconnected processes that impact the financial management and supply relationship. By optimizing the P2P cycle, the organization can realize several benefits. The cost saving, uh, a streamlined P2P cycle reduces the manual intervention and automates the workflow, leading to reduced processing cost and enhanced overall operation efficiency. This optimized This optimization minimizes the need for manual data entry and routing of a purchase order and sales order, resulting significant time and cost saving. The cash flow management implication, that is cash flow management, the implementation of efficient P2P cycle enables the organization to automate the vendor invoice processing and payment approvals. This automation facilitates timely payment to the supplier, fostering stronger relationship and potentially unlock the favorable payment terms, improving the cash flow management through P2P optimization can positively impact the organization financial health. The transparency and control. P2P cycle provide visibility and control over the entire procurement process from requisition to payment. This ensures the compliance with internal policies and external regulated regulations and mitigating the risk of non-compliance and associated penalties. The transparency offers by the optimizing the P2P cycle enhances the accountability and governance within the organization. The supplier relationship management. By streamlining the procurement process, an optimized P2P cycle cultivates the collaborative relationship with supplier and enhance the negotiation power. As a result of organization can expect better supplier performance, improved services level and potential more favorable terms and conditions and stronger supplier relationship, contributing to the more reliable and resilient supply chain. In conclusion, a effective P2P process is integral to enhance the financial management, it improving the operational efficiency and strengthening the supplier relationship. By leveraging the benefits of optimized P2P cycle, the organization can achieve the cost saving, improve the cash flow management, enhance the transparency and control, and strengthen the supplier relationship, ultimately contributing to overall success of the organization. So let's move to the next slide. So you can see the challenges of P2P and an organization embarking to the implementing the procure to pay process. They often face multitude of challenges that can hinder the smooth operation of entire process. Some of the common challenges include say lack of data visibility. So you can say inadequate insight due to scattered data across the system hinders the decision making. To address the issue of organization should thoroughly assess the existing data and identify the gap before implementing any new process to ensure the comprehensive data visibility is there. Manual input and paper invoices. The reliance on manual approval and paper invoices lead to visibility loss and inefficient. To overcome this challenge, the organization should streamline the process and reduce the manual step and embrace the digital solution to enhance the P2P process. Governance and compliance challenges. To ensure the adherence of policies and regulations can pose a complex challenge during P2P implementation. The solution lies in implementing the robust control and automating the compliance check to navigate these governance and compliance challenges effectively. Unconventional spending. Unauthorized purchase outside the establishment process impacts the cost control. To address the issue, the organization should focus on educating the employees and enforcing the policies and closely monitor the spending to mitigate the impact of overspending. Supplier relationship management. Maintaining the healthy relationship with the supplier is a crucial for success of P2P process. To foster the opening of the communication and collaboration within the supplier, organization should prioritize the transparent and collaborative engagement with all suppliers involved. Consolidating the system and process. Integrating the various system and processes involving the procurement and payment can be significant roadblock. To streamline and to centralize the data, the organization should focus to improve the visibility and effective throughout the consolidation efforts. Unconcerned by the management, the lack of management commitment can hamper the successful P2P implementation. To achieve that, obtain the executive support, emphasize the importance of the process is crucial in addressing this challenge. Absence of authority and compliance. Ensuring the proper authorization and compliance with the policies present its own challenges. To resolve those issue, you can implement robust control and automate the approval workflow is key to effective addressing this concern. Lack of communication or poor communication, you can say. The silos between the department lead to a communication gap during the P2P cycle. To mitigate this issue, the organization should foster collaboration and transparent communication throughout the P2P cycle, ensuring that the relevant departments are effectively involved. So these are some of the reasons, right? So to address these challenges proactively not only enhance the effective efficiency but also optimize the P2P process, leading to improvement in the operational effectiveness and overall organization success. Let us move to the next slide and understand the O2C cycle. So you can see the order entry where the customer in O2C cycle process is a critical series of activity in the business sales cycle. It involves the entire journey from receiving a customer order to receiving the payments. The key stages within this process are, as you can say, order entry. When the customer places an order, the order management sends a notification, right? So you enter the order in the order management, so relevant individual teams or say get notified by those notification, and integration with CRM systems streamlines the customer facing aspect of the business. The management of customer payment based on the customer selection payment method, that is credit, debit, or any external payment method, the payment process is handled. In the e-commerce system, the automate payment approval is processed. In order fulfillment, it coordinates the fulfillment process including the scheduling, reservations, and shipping to ensure the accurate and timely order is fulfillment for the customer. Invoice generation, it generate invoice for to complete the order. Invoice delivery, distribute the invoices to the customer. Account receivable management monitors the outstanding and the payment and manages the receivables. And the payment processing, process the payment customer payments and update the financial records. So move to the next slide, how the Fusion order management of cash cycle works. In Oracle Fusion, the order to cash or say O2C cycle is comprehensive set of integrated business processes that the organization utilize to effectively manage the entire sales and revenue generation lifecycle. It encompasses the series of interconnected stages beginning with the creation of sales order and concluding with the receipt of customer payment. Some of the details of overview we can see in Oracle Fusion O2C cycle. The first is the order entry. In this, O2C cycle commenced with the creation of sales order in the Oracle Fusion order management. This sale order are typically generated in response to the customer request, sales inquiry, or other demand signals. Order validation. Order undergoes thorough validation check of ensuring that they meet the specific criteria including availability of inventory, credit limit, and the pricing accuracy. The validate order proceed to the next stage, while the order with issue are flagged for resolution for resolution. In order promising, Oracle Fusion uses the order promising to provide the customer with accurate delivery date and commitment date. The system takes into account the factors such as availability of inventory, production schedules, and shipment constraint to determine the delivery date. So order fulfillment. Once the order are validated and promised, the fulfillment process begin. The inventory is reserved and the item are picked, packed and shipped to the customer. In case of service-based businesses, this stage may involve scheduling and delivering the services. So invoice generation followed. In this, the following successful fulfillment, the invoice are generated in Oracle Fusion Receivables. These invoice details the product or services, providing the quantity, price and payment terms. Invoice delivery, the invoices are delivered to the customer using various channels such as email, mail or electronic invoicing. Customer are notified of the amount due and provide with payment instructions. In the account receivables, Oracle Receivables manages the account receivables, tracking the customer balances, payment and aging. Organization can view the customer account information and send reminders for overdue payments. The payment processing, the customer makes the payment based on the issued invoice. Oracle Fusion Receivables record the received the payment, including the checks, electronic transfer or credit card payments. The payment reconciliation, the payments are reconciled with the outstanding invoice to address any discrepancies. This reconciliation process ensures the accuracy of the organization and financial record. And credit management, the Oracle Fusion provide tool to credit management, allowing the organization to assess and manage the customer credit limit and risk. And collection management, the organization can utilize the Oracle Fusion to manage the collection, including sending the reminder and pursuing the collection activity for overdue accounts. Report and analytics, the Oracle Fusion offers the comprehensive reporting and analytical capabilities to track and analyze the sales, revenue and the customer payment data. This insight enables the organization to make informative decisions and automate the O2C process. So we can conclude with that the Oracle Fusion O2C cycle effectively streamlines the sales revenue generation process, ultimately leading to enhance the customer satisfaction and improves the financial management by integrating the various modules and functionalities within the Oracle Fusion suite. It provides to manage the entire O2C O2C order to cash lifecycle. Thanks it for today. Thanks for joining this webinar on Get Started with Oracle Supply Chain and Manufacturing. Thank you for today.